So now we're up to the refining stage. The refiners themselves, they also take out silver. They'll also take out gold, coins, and bars, and they'll try to resell it to guys like me that need it. So again, depending on the size and depending on the quantity, and again, they're not going to spend much time looking at it, but if the product looks very, very good, they'll put it aside and they'll offer a guy like me, for example, to be able to buy it from them, and they don't want to be busy with the transaction, so you're buying in bulk, tremendous amounts. You have pot luck, you'll have some coins in there that are scratched, that are not resellable, that will eventually get refined, and you have most of the coins that are good. Okay, so now, and therefore, I was always sitting pretty. I had a nice size inventory and everything was moving smoothly. These guys on the lowest rung, those were the ones that were complaining because now all of a sudden the premiums went up because there was large demand for the silver. Now, as the premiums began, not necessarily the premiums going up, but as there was this backwardation in the silver market, the refiners were not able to hold on to anything and even start sorting it out because so much stuff was coming in, they were just melting everything down. So now you got to the point where everything is melting down. Refiners are already getting ready to close the year out come December. So already, for example, the U.S. Mint is not shipping any more 2025 Eagles and coins like that. They're all working already on the 2026, and the dealers are already starting to sell the 2026. So always year end, the premiums on coins and bars typically go up because there's not enough supply. That's on a normal basis. Now imagine this year where the supply is constrained so much because there was so much melting and so much other stuff going on. There's really, really going to be a tightness in the market now. Does not mean that there's a shortage of the metal. It's all there, but it just doesn't have the product that necessarily the customers want. So for example, when you have these small sizes or the odd shaped bars and things like that, the producers are not ready right now to be producing because there's not enough demand that they should segregate a machine and be able to put it aside for that. So they'll rather produce the things that are moving consistently that they can flip as fast as possible. Remember, when you get a gold price in the $4,400 range, and you have or the $4,000 range rather, and you have silver above $50, now they have to invest a tremendous amount of capital to make those 1,000 or 5,000 bars. They want to flip it. They want to get their money back as fast as possible and be able to produce further. So therefore, comes the end of the year, there's always a tightness in the market. This year, especially, there will be a tightness until the January shipments start going out. I hope this explains it.